Welcome to our deep dive on a topic nobody saw coming. The world's most coveted countries are quietly rolling up the welcome mat for Americans. With headlines always touting a new paradise escape, today we're flipping the script. Why are so many dream destinations suddenly tightening their borders and raising barriers?
That's a great question. The surge in American migration and tourism has triggered local backlash in places like Portugal, Mexico, and Thailand. Factors like rising rents, cultural clashes, and overwhelmed infrastructure are pushing governments to rethink their open-door policies. It's a global reset affecting anyone hoping to move abroad.
We'll break down the specific reasons and new regulations country by country. But first, let's understand the root causes. What's the big picture trend driving all these changes across such different regions?
It's a combination of economic and social pressures. As remote work exploded post-pandemic, Americans flocked to affordable hotspots, often outspending locals. This led to housing shortages, inflated prices, and local resentment, prompting governments to act. It's not just about visas, but about protecting national identity and resources.
Let's start with Portugal, once the crown jewel for expats. What's changed since the days of easy living and the golden visa?
Portugal's transformation is striking. In 2022 alone, over 0 Americans moved there. But by 2025, the Golden Visance, a fast track to residency via property investment, has been gutted. Buying real estate no longer guarantees a ticket in, and lawmakers are reacting to local protests over 40% rent hikes since 2019.
That's a huge shift. How are these policy changes actually affecting Americans hoping to settle in Lisbon or Porto?
The impact is immediate. Many apartments once available to foreigners now require strict registration, and some are outright illegal for non-residents to rent. The government is prioritizing locals, making it much harder for Americans to secure long-term housing or residency without meeting new, tougher criteria.
Now let's talk about Mexico. Americans have long seen it as an easy escape, tacos, and a short flight from home. What's different in 2025?
Mexico is tightening up. Tourist visas are being more frequently denied extensions, especially in crowded expat hubs like Mexico City and Tulum. Income requirements for residency just jumped to over $300 a month, and random spot checks at customs are weeding out digital nomads who don't meet the new standards.
Can you give us an example of how these changes play out for Americans on the ground?
Sure. Entire neighborhoods are cracking down on unregistered Airbnbs. In some cases, Americans have been evicted overnight with no recourse. The government is actively enforcing these rules to push back against housing shortages and to address local frustration with rising costs.
Thailand's always been famous for its laid-back visa policies and affordability. But what's the reality for Americans in 2025?
It's a complete turnaround. Visa categories are stricter, especially for retirees and remote workers. The new LTR visa demands 80 annual income or a $1 million investment plus 100 health insurance coverage. Even basic tourist visa extensions are under heavy scrutiny, and re-entry denials are up.
That's a huge leap from the days of 400 monthly apartments. But what's fueling local resentment toward expats?
Rising rent, cultural friction, and illegal work are big factors. Cities like Chiang Mai and Phuket are seeing crackdowns on unregistered rentals and unauthorized freelancing. Some expats are being fined or deported for activities as simple as working online in a cafe without the right permit.
Costa Rica has long promised pura vida for Americans seeking a slower lifestyle. But is that dream still achievable in the face of new restrictions?
Not easily. The minimum for pensionado residency is now over. $500 per month. And you need to prove stable foreign income. Rentistas and investors face even higher bars. Random audits and tighter banking rules are making it tough for anyone hoping to fly under the radar.
How are locals responding to these changes?
There's growing backlash. Coastal towns like Tamarindo are protesting soaring housing costs caused by foreign-run Airbnbs and pop-up retreats. The government is enforcing stricter reporting rules, and unlicensed businesses are being shut down to prioritize local needs.
Spain's lifestyle is legendary siestas, sangria, endless sun. But what's behind the sudden clampdown on American expats and retirees?
Spain's non-lucrative visa now requires over $400 per month, with even higher thresholds for families. Hotspots like Barcelona and Valencia are limiting new foreign residents, and property purchases are hit with extra taxes and tighter regulations. It's a direct response to locals being priced out.
It sounds like even digital nomads face new challenges. What's changed there?
The digital nomad visa demands proof of international income and extensive background checks. Contracts with Spanish companies are banned for these visa holders. Plus, regional offices may deny applications if local housing is in short supply, making approvals far less predictable.
Bali's image as a digital nomad paradise is everywhere, but is it still accessible for Americans looking to live and work there?
Access is definitely tightening. The visa on arrival now requires proof of onward travel, a fixed address, and can only be renewed once just 60 days total. Overstaying can mean fines or blacklisting. The digital nomad visa is real, but requires a 140 zero bank balance and proof of foreign income.
What about the social climate? Are locals supportive of expat communities?
Not as much. Balinese leaders are calling for quality tourism, and in 2024 alone, over 200 foreigners were deported for minor offenses like unlicensed retreats or disrespecting sacred sites. Stricter zoning and licensing rules mean that even renting a villa can be a legal minefield.
Italy conjures up images of vineyards and la dolce vita. But what hurdles now await Americans hoping to make that dream permanent?
Italy's elective residency visa now mandates at least 38 per year in passive income, not active work. Applicants must also secure a valid lease, comprehensive health insurance, and often undergo in-person interviews. Even buying property doesn't guarantee residency, especially with new regional caps on foreign ownership.
How are these rules affecting the property market and expat communities in places like Tuscany?
Local governments are imposing extra taxes and zoning restrictions on foreign buyers to protect local housing. Short-term rentals like Airbnbs now require strict licensing and safety inspections. Non-compliance can lead to substantial fines, making the dream of an Italian villa much more complicated.
Vietnam used to be famed for its visa flexibility and vibrant expat life. How is that changing in 2025?
Vietnam has reintroduced the 30-day tourist visa with limited or no extensions. The government has closed loopholes for perpetual visa runners, and temporary residence now requires a registered company sponsor or foreign employment. Freelancing without a permit is illegal. Even working on your laptop in a cafe can get you fined.
Are there real consequences for Americans who try to skirt these new rules?
Absolutely. In 2024 alone, 700 foreigners were deported or fined for visa violations, some blacklisted for 5 years. Property taxes for non-citizens are increasing, and authorities are monitoring foreign renters more closely, especially in cities like Da Nang and Ho Chi Minh City.
Finally, let's look at Greece and the UAE, two destinations with vastly different cultures but similar tightening of residency. What's happening there?
In Greece, the golden visa threshold doubled to 500, zero in key regions, and new rules limit short-term rentals. Even with confirmed accommodation, Americans can be denied entry if they can't prove funds or intent. In the UAE, especially Dubai residency is tied to employment or a remote work visa with a 50 monthly income requirement and strict documentation.
It sounds like the cost of living and cultural expectations are also shifting. How do these factors impact Americans considering a move?
In Dubai, housing prices jumped 7% in 2024, and losing your job can mean deportation within 30 days. Cultural laws are strictly enforced, with limited freedom of expression. Both Greece and the UAE now prioritize local needs and compliance, making spontaneous moves nearly impossible.
So, what does all this mean for Americans dreaming of life abroad? Are there still realistic pathways, or is the era of easy relocation over?
The landscape has fundamentally changed. With rising barriers, anyone considering a move must thoroughly research visa requirements, local sentiment, and financial expectations. It's about doing your homework, being adaptable, and respecting the communities you hope to join. The days of just showing up are over.
Before you book that one-way ticket, remember, rules are evolving fast. Subscribe, stay informed, and approach your dream destination with eyes wide open. Thanks for joining us for this in-depth look at the new realities of global mobility.
Thank you for having me. It's an important conversation, and being proactive is the key to a successful move abroad. We'll keep watching these trends, so stay tuned for updates and strategies to navigate this new world.